Hi, I'm Daniela Cambone for StansberryInvestor.com, and today we are talking all things DeFi. In fact, billionaire entrepreneur Mark Cuban came out earlier saying explosive growth in DeFi is like the early days of the internet. So decentralized finance has experienced a real uptick. In fact, last summer is now known as the DeFi summer because the total value locked into their smart contracts rapidly grew from a few hundred million to more than 20 billion in a matter of months. Joining me today to talk about all this is Miguel Vias. He's a payments and cryptocurrency executive. He's also the former head of XRP markets for Ripple. I couldn't think of a better guest to have on the show here on StansberryInvestor.com. Miguel, we go way back. Welcome to my show here.
Daniela, thank you for having me. This is a real pleasure. It's so interesting to be meeting in this world, given that we both come from another world.
And you know what? I'm going to get to that later. And that world is gold. And we are talking the crypto world today, but we'll get to that later. Okay. I first want you to help make sense of decentralized finance. So we're hearing voices like Mark Cuban coming out saying, hey, guys, this is the future. So first and foremost, why should we be paying attention, Miguel? What do we need to know here?
Right. Well, I think to take it back to first principles as to why DeFi is important, and it piggybacks off of why cryptocurrencies, decentralized ledgers, and blockchains are important. If you think of what Bitcoin allowed us to do, for the first time in the history of humanity, you could send value to someone without an intermediary. That's what really Bitcoin allows you to do, right? So I can send you value without a bank, without a payments company, without anything, literally just from my wallet to yours. No one can stop me. I don't have to ask permission for anyone. I can do it 24/7 and it's relatively cheap. You couldn't do that before, right? And it's kind of a watershed moment in the history of financial innovation, if you will. DeFi then kind of takes that to another level. So what decentralized finance allows you to do now is it still lets you do that, right? And most decentralized finance platforms are built on Ethereum. It still lets you do that, but then on top of that, you can now borrow and lend without an intermediary. And that wasn't possible before either, right? So now, ostensibly, if I have some ETH, I could go to, go to one of these, Compound or Yearn, put down my ETH as collateral, borrow a stable coin, and then turn my stable coin into dollars and go buy a house.
Okay, well said. Now I have 1,000 more questions. Okay, So one, what does this mean for the future of banking then? Are you talking about a world where banks would then be obsolete one day, Miguel?
No, I don't think banks will ever be obsolete. I think that number one, there are some important questions in DeFi around kind of regulatory compliance, right? And I don't know if a few weeks ago, FATF came out with some guidance with respect to KYC AML. And guidelines on decentralized exchanges. So I think for a long time, banks will still be around. But it does bring up an interesting question in terms of competition and inclusion and accessibility. I think for me, one of the things that I absolutely adore about DeFi, and this is some of the things that make regulators and governments a little concerned, is that you don't know, if I'm a woman, if I'm Black, if I'm Hispanic. You just go, you drop in your ETH, you take out your loan, and then you go do whatever it is you want with it, right? I think that empowerment is real. You don't know if you're 15 or 85. You don't know if you're in Cambodia or if you're in the US. And that type of freedom hasn't been available to folks financially. There's always been these gatekeepers. DeFi removes a lot of that, all of it. There's some technical gatekeepers and, kind of moats that you have to run, kind of jump over in order to actually touch the protocols and touch the products, but people are working on making that more easy and more accessible. So I don't think banks are going to be obsolete, but I do think that this will compete with them in a real way.
Why was the platform, and I love how you call it ETH, I feel cooler saying that, so I'm just going to run with it. Why was it built on ETH and it did start on Bitcoin?
So the reason this is all happening on kind of the Ethereum network is that Ethereum has smart contract capabilities that Bitcoin doesn't, and it was designed that way, right? So in Bitcoin, the things that the miners validate are just transactions, just movement of Bitcoin from one wallet to another. On the Ethereum network, you can write in logic and code in smart contracts onto the protocol, And then the miners validate the logic inside of those smart contracts, not just a movement of ETH back and forth. So the system allows for more complexity, basically. And that's kind of how it was launched, right? It's kind of like the supercomputer for the world, Ethereum. But that doesn't mean Ethereum wins the race. I'm not even sure what race we're talking about. But and I understand that this is the way it's couched out there, like this has to win or that has to win, but really like a lot of this is going to coexist and it's going to be just fine. Now, Ethereum has some challenges, right? As you would expect from like the first mover with respect to smart contracts. The technology was not built for this type of scale. And I think it's grown much more quickly than people anticipated. So there are competitors to Ethereum. There's Near, Solana, Polkadot, Cardano. These are all different flavors of blockchains that solve some of the problems or challenges that Ethereum has right now. Mostly it's congestion and high costs. So we'll see. The Ethereum folks are working like blazingly fast to try to fix these problems, but there's real competition out there.
So what do you think will be, or has been the reaction from, I know you're not in the minds of central banks or the banks or regulators, but is there a fear attached to DeFi?
I don't think there's a fear. I think when you're talking about nation states that have armies, they don't fear a lot of things. I think, they're trying to be anticipatory with something that might become a threat down the road. But I do kind of snicker a little bit and giggle when I see on Twitter that people are like, oh, the Fed is afraid of Bitcoin. I'm like, the Fed isn't afraid of anything. Like the Fed is just trying to figure out, like, how do we make sure that we manage the system appropriately? Like there's no,
that is well said.
Yeah. So now, what these folks are looking at and saying, okay, well, there's real innovation happening here. I think before, like, Bitcoin was taken as a joke. It's like, whatever, that little thing over there that the nerds are playing with. And then they woke up one day and the thing's worth $1 trillion. And they're like, whoa, what's going on here? Who's investing in this? Like, is there, I'll tell you what they do fear is, can this become systemically, like, threatening? Like, if Bitcoin goes like it did last year, from 10 to 3, if it goes from 60 to 20, are pension funds going to go bust? Like, are people going to lose money? Those are the things that they're more concerned about. With respect to DeFi, at least from that FATF guidance, it's clear that they're now honing in on important things, right? Money laundering, terrorist financing, right? They want to make sure that these innovations are not being used for things that could be harmful to large groups of folks.
Okay, if guys like Cuban are saying, this is the greatest thing since the advent of the internet, and if we know this now, how can we position ourselves to win on the other end? Or how should we be positioning? Or how do you, profit from this if this is the future?
Yeah, I think at this point, it would be irresponsible not to have some crypto in your portfolio, whether that's Bitcoin or ETH. To date, most of these things have moved in unison. Sometimes, like, the smaller currencies will overshoot on a percentage basis the moves in Bitcoin, and that can persist for a while. But if you have Bitcoin and if you have Ethereum, you're going to get, I think, a relatively good exposure to what's happening in the space writ large. I will say this, like, it is difficult to stay on top of what's happening because things are moving so quickly. I mean, you mentioned the stat that last summer there was a couple $100 million locked up in DeFi. Now there's 20 billion. Some of that is just due to appreciation of assets because a lot of these assets have 5x, 10x, but there's real movement of value into those smart contracts. And that's happened in months, right? Like, not years, months. One of the things, so in 2017, at 2018, 2017, after the bubble burst and everything went really quiet, some people were like, oh, this is never going to come back. It's going to take 5 years. It's going to take 10 years. And I remember having a conversation with a buddy of mine and saying, well, maybe, but remember, they're like, oh, it's just like the stock market bubble, the internet bubble in the 2000s. I was like, kind of. I think the difference here is that the internet didn't have the internet. And crypto is a world that lives on the internet, and the collaboration allows for an incredible amount of speed. So I think you have to stay on top of it as much as you can. You have to be mindful of the teams. There are definitely some folks who are in this for themselves and are not doing this for the greater good or anything like that. So you have to be careful who you invest with, but at a high level, at the very least, you should have some Bitcoin and Ethereum. Sorry, that was a long-winded way of
no,
maybe not answering your question.
really well said, Miguel. And I guess just to transition now, and I'm going to say my next statement, not to embarrass you, but maybe I will embarrass you a little bit. You are probably one of the brightest minds I've encountered in the course of my career. And I don't think I've ever gone on the record saying that about anyone on air, but I mean that. And we met when we were both working in the gold industry. You were a senior director at CME Group, and then you later went to become a director over at Ripple. So you have had powerful positions in both the precious metals world and the cryptocurrency world. I don't know if you've been following Stansberry Investor, but I have a highly anticipated debate: gold versus Bitcoin, Michael Saylor versus Frank Giustra, about this very topic of, is Bitcoin better than gold? Is gold better than Bitcoin? Should they both coexist? Do we need both? It's a loaded question, but how do you see it? When you hear talk that, look, Bitcoin is like gold, but just better, what do you make of that rhetoric?
Yeah. So look, number one, I'm very embarrassed, and thank you for the incredibly kind words. That's very, very sweet of you. And I do think I have had a really interesting vantage point, right? Both from the CME and then at Ripple and jumping into crypto. And, I spent the first 12, 13 years of my career in gold. And I've thought a lot about gold and read a lot about gold, right? And, like Paul Volcker's, was one of my heroes growing up, financially. And when I think about gold versus Bitcoin, to me, not that it's a false debate or like a false dichotomy, but this doesn't have to be one or the other, and I don't think it will be, right? I think when you look at gold, it has some properties that Bitcoin doesn't, namely, and this is kind of touching back on our previous conversation, that it can't get shut down by governments. It just can't. Right now, they tried, and that didn't work out. When they basically banned gold and banned conversions of dollars to gold, didn't really work out that well, and the governments don't see it as a threat at all anymore. So it depends on what probabilities you ascribe to basically a government actor attacking the Bitcoin network. And if you think that probability is relatively high down, kind of down the road, then you're going to say, I'd rather own gold. Fair enough. If you think that the probability of that is relatively small, then I think there's no debate that Bitcoin has some advantages over gold, namely that I can carry it with me on a thumb drive no matter where I go. I can't do that with large amounts of gold. And I can send it to anyone, anywhere, anytime. I can't do that with gold. And it's not like, some folks are like, well, you can digitize gold. I'm like, no, you can't. I'm like, that's the point. The point is, like, I have a bar of gold and it's mine and you can't take it from me. Digitizing it means it's stuck in somebody else's vault somewhere and I don't have control of it. So I'm trusting somebody with my gold. The whole thing here is about trust, right? So I own both, and I'm happy to own both, and I own both for different reasons, right? I think what you no longer will do is own both these things for the same reason. That, I think, that's not why you're doing this anymore.
So for wealth preservation, okay, long term, not a speculative play. And I don't want to put you on the spot, but okay, I'm going to put you on the spot and go back to your point about, okay, the Fed doesn't fear Bitcoin. I laugh because, those are such common headlines, but they, central banks, could they not pull the plug? Regulatory bodies step in and say, and halt Bitcoin. And then, so how does that play into, if you're looking at Bitcoin for wealth preservation?
Yeah. So
what is the likelihood for you is what I'm asking.
It's interesting. So I've been reading, reading Peter Thiel's comments around China weaponizing Bitcoin. And I kind of did a little bit of a double take. China's been cracking down on Bitcoin for years because it allows people to move money offshore, right? And you get capital flight, which is a problem for China. And, do I think that is a possibility in the States? For sure. And I think, a lot of this has to do with tax collection and whether or not, the government can continue to collect taxes the way it has in the past, and whether or not some of these tools, Bitcoin and DeFi, allow folks to skirt some of those rules. So I think if it got big enough and they didn't regulate it properly, where that they couldn't see, the flows to tax, then there might be some ham-fisted, and probably, draconian attempt to shut it down. But you can't shut it down, right? Like, unless you're going to basically buy all the ASIC miners in the world and then attack the network, like a 51% attack to, basically destroy, its integrity. Unless you're going to do that, you'd have to shut down the internet. So you can regulate the endpoints and you can make it really difficult to hop on and hop off, which is what they're doing. They're regulating those endpoints. Some would say too much, some say too little, but you can't get rid of Bitcoin. Like, that is not a thing. Again, unless the government were to wake up and say, all right, we're just going to attack the network, right? But basically, like, writing a law that says Bitcoin's illegal now, okay.
Right.
Good luck with that.
Good thoughts. Miguel, I appreciate your thoughtful and balanced views on this topic. And I'm happy we reconnected here on StansberryInvest.com, but I got to get you out of Miami. You got to come back to NYC here.
I plan to at some point over the summer. By the way, Miami, having a moment. It's impressive. You should come down sometime. There's a lot of crypto folks here now.
The crypto community is all in Miami. All right, I'll be coming down there soon. But in the meantime, I have a debate to prepare for, and I know you'll be watching it.
I cannot wait. It's going to be a good one. It's juicy.
It's definitely juicy, and you can get premier access. Sign up at Daniela Cambone. It airs April 21st, so be sure to sign up. Michael Saylor versus Frank Juster on the topic of Bitcoin versus gold, only on Stansberry Research. Thank you all for watching. In the meantime, continue to share us where you watch us. That's it for me. I'm Daniela Cambone.